Welcome to Biztech's Asia's Hottest Startup Show, the show where we feature hot startups across Asia, sharing their entrepreneurial journeys and sharing with us their journey towards becoming Asia's next tech unicorns. Today, we feature ADDX, which was founded in 2017, and it's a digital securities exchange. It was formerly known as iSTOX. Now, here to tell us about ADDX is Oyi Chu, its Chief Commercial Officer. Oyi, welcome to the show.
Hi, Brian. Great to be speaking with you today.
Oyi, can you start by giving us an overview of ADDX, its history, and also the reason for the current rebranding exercise?
Sure. Look, ADDX started as iSTOX actually in 2017, as you mentioned, really with two trends in mind. One large trend was obviously the shift of capital from public to private, and we were seeing more and more products and more managers develop ideas for the private markets. But also the second was the technology piece. And why did these two pieces converge? One was at the private markets level, these products were designed for sovereign wealth funds and institutional capital. And so, fund managers, companies, they had to cater to a small number, but large dollar sizes. And they were, so the infrastructure was set up very much for the ultra rich or the, sort of big size capital. But as the space started increasing, the demand for that started sort of to trickle down from the global family offices to the ultra high net worth families, and then now to the high net worth who are desiring something with a different return risk profile from the public markets, and they wanted thematic ideas, and there was actually no solution for that. If you look at the private banks and how they are actually serving their needs, they were like, oh, minimum ticket sizes of 1 million to get into a hedge fund, minimum ticket sizes of 250,000 to get into a PE fund. And these were really because of the operational and the technological challenges of managing these smaller high net worth individuals. Now, the second part of the trends that were very interesting is actually the development of crypto and blockchain. And we're all starting to see blockchain being a very interesting use case across financial services. In that, why is it so powerful? It is powerful because as a ledger, which is the heart of the blockchain, the information that sits within the ledger is immutable because of the way of the protocols that the blockchain is set up. But also more interestingly, smart contracts can sit on top of blockchain. I know I'm using a lot of technological sort of terms here, but essentially it just means that the instruction at which the securities can be managed are all coded. So for example, we automate a lot of the activities, paying the coupon, redeeming a bond, issuing a bond, how the bond is traded, and who owns what are all sort of controlled within this blockchain ledger. And I think that's been very, very powerful. So the combination of these two large trends, our founder, Danny, managed to get seed funding from SGX, as well as Heliconia. We went into the sandbox, and we can talk about our experience in the sandbox, and we graduated in February last year, right into COVID. So that's kind of the very interesting sort of beginning of iSTOX. And so we started running iSTOX. We started talking to a number of funds and partners to onboard products. I have to say it is quite interesting because iSTOX or ADDX has actually always been a COVID sort of company. And we were forced to really adapt to that. Digitization, digital marketing, how do we do roadshows, how do we reach out to investors? And I think we are very grateful for our partners who've supported us. So now we've done, I think, over 20 transactions on our platform. And we continue to really think about the partners that we work with. But also that I think we've gotten a lot of traction with both investors and issuers at the same time.
Oh, so, yeah, I want to check with you because of obviously because of who your investor is. How does that work in terms of the regulatory framework behind what you do?
Yes, I think there are two parts of that. So one was being able to work with MAS into the sandbox and what they required. And what was quite clear to us and to them was that we actually come up with a package of licenses that were quite different from the typical. So we actually have three types of licenses, which is dealing in securities, custody, and the recognized market operator, which allows us to operate the exchange. A lot of this was guided by SGX. To some extent, they are limited as with an exchange license, so they can't actually issue by themselves.
Yes.
But they helped us think through some of these. How do we set up the governance? How do we think about products that are being put on the platform? And certainly some of the tech nuances, they were very supportive as well. So the SGX relationship is not a regulatory one. They are clearly a partner and a shareholder.
And also, I suppose then if I were to take a step back and look at it, it's a very smart way for SGX to do experiments.
Yes, I think that was exactly right. I think they also see the potential of distributed ledger technology, which is obviously what blockchain is also known as. And you will see across the world, I think all the exchanges are looking at this technology and to see how it could potentially improve or disrupt their business.
Okay, so I'm going to ask you, but in layperson's terms, really, why are digital securities important? What programs, what problems do they really address? And what impacts, because you're an ex-banker at UBS, you tell us, what impact does it have likely on capital markets in the coming year? So three different pieces of the puzzle.
Yes. This is it's very interesting. Let's start at where we started off with, and then I'll tell you where I think this technology can be further deepen into capital markets. But we started out with a vision to really open up access for private markets to high net worth, actually to individual investors. And why is that interesting? Because as I mentioned to you, if you were a UBS client, you would have to be of a certain, let's say 50 million net worth before they would offer you a hedge fund, right?
Yeah. And you would also have to have a minimum spend of a couple of million just to be a customer, right?
Yeah, that's exactly right. But if you, in Singapore, the definition of accredited investor is actually minimum net worth of 2 million Sing, or a net income of 300,000 a year. And that space is not very well served. Because if you had, let's say, 1 million in net financial assets that you wanted to invest, you're not going to put 1 million in a hedge fund, right?
Yes.
What is the right size for you as an investor is actually probably 50,000.
Yeah, exactly. Because it's a higher risk. You need to, as part of a portfolio, yes. That's a high risk investment. It should be a small 5, 10, 15% part of your portfolio, and that's it.
Yes. But does it make sense to be in your portfolio? Absolutely. If the private banks are advising family offices to have allocations into hedge funds and private equity, then it also means that as a small investor, you would benefit from having hedge funds and private equity in your portfolio because of diversification, right? But there was nobody cares about that 50,000. Nobody, no institution has the capability to
geared from what do you call it? From a business perspective, from an overhead perspective, to deal with that 50,000 in the first place.
You are exactly right. You are exactly right. So what's happened is that over time, these operational and technology teams and banks started to grow and grow and grow in size to meet regulatory complexity, and to meet the growth of the products that are non-listed. And so they kind of started to move the bar higher and higher, just because operationally it was easier to manage. But we started from the other end, right? We built a technology platform that is extremely efficient, and that we can size down these investments down to, right now, we're offering venture capital funds at $10,000 investments.
So you essentially are democratizing investing.
Exactly. With democratizing private market investing, for example, we have global names like Partners Group, which are typically obviously larger sizes in private banks, but we have opened up 10,000 minimum ticket sizes on our platform. We have a few interesting, venture capital funds from China and from Southeast Asia. We have hedge funds. We have Quant Edge, which is a top 5 global macro hedge fund. And we offered that was last year, we offered that at 50,000 per investment size. And that fund has done extremely well. So I think it's great for investors to be able to access that. And we will continue to grow the quality of the private equity fund managers that we're working with. So that's one piece that we started to do. But we also started to realize that actually the digitization process means that because we automate a lot of the post-trade activities, that actually there are a lot more capital markets efficiencies to this game. For example, bonds. There's a very complex ecosystem for bonds to be issued, but in reality, as the world starts to digitize, all that can happen across a single platform. And so, there are actually, in the future, I see digitization becoming a much, much larger part of financial services. And whether a bank builds it or works with a partner, I think that is to be seen. But certainly blockchain and distributed ledger are technologies that are driving a lot of these thought processes and changes.
And also what you seem to be doing is then very much in line with what the Singapore government has also encouraged companies to do. I mean, I think just a couple of weeks ago, Ho Ching mentioned that businesses need to widen investment opportunities for retail investors.
Yes. I think that the private, Temasek has for many years looked at trying to bring private equity investments in the right format, in the right to retail investors. I think we certainly will be a big facilitator of that. In fact, we worked with Azalea earlier this year to package. They have a portfolio of private equity funds, and they package products for retail, high net worth individuals, etc. And we help to tokenize some of that. But we see this space as very, very large. I mean, for example, could we offer one of these global PE funds? I mean, we've already offered partners. How about KKR? How about TPG? How about, all of these funds? I mean, a lot of these high net worth investors don't have access to these funds. And of course—
And these are global names. I mean, these are names you read about, you hear about on Bloomberg, but you've never, even if you're a relatively high net worth individual, you don't have access to investing in these sort of funds.
Exactly.
And they have very good returns in general. They're smart people running these funds. They have very good returns.
Exactly. I mean, for private equity funds, the expectation of returns is anywhere between sort of low 20%, to high 20%. And a lot of them are thematic. I think what's really exciting today and where we see is that a lot of the investors on our platform are specifically asking for certain themes. So for example, crypto is obviously a big theme. Everyone's asking, how do I express myself in crypto? I don't want to open a crypto exchange account, hot wallet, cold wallet. I don't know what to do with that. How do I express that, right? The second very big, probably equally important, is impact. How do I invest in impact? And when investors want to look at impact, they're not looking at the company that's sort of already been there for 30 years and they're doing real estate in a sustainable way. I think what they want to do is invest in growth companies who are building technologies for that.
Okay, so Oyi, there's two segments of impact, isn't it? The ESG and also impact in terms of growth. Can you kind of demarcate that a little bit?
Oh, there's so many subtopics to that, right? I think there's obviously one, the sustainability, green. How do we encourage existing companies to change the way they do things or to change the way they think about metrics? So, for example, we're working on a bond deal at the moment of a large listed company. Here, they're sustainably linked bonds. And the coupon would reset if they achieve certain targets. Now, over time, I see actually blockchain being quite powerful. So if this happens, the coupon changes, then it impacts. So we would then on our platform quickly adjust for that coupon payment, right? So we are helping companies with complex sustainably bond or green bond type metrics achieve some level of efficiency at some point. The second is actually the younger companies, and it could be companies who are in Series C, Series D, commercializing or developing technologies that are, could be agri-tech, for example. It could be, plastics replacements, for example. And I think there's so many of these companies, we can either help fund them direct, or we could work with fund managers who are very big in the space, and many of them have sub-funds that are now focused on strategies across the spectrum.
And this is very interesting, the thematic plays that you've just mentioned, because it then also plays into the fact that while today you don't offer your services to retail investors, it's only accredited investors.
Yeah.
I would think that retail investment is probably next on the cards.
Well, we would love to do that. If you see what Madam Ho has mentioned in her speech, I think the thinking is also for a increasing number of Singaporeans to be able to access private equity products in that same light, right? So that they can also buy into some of these ideas and technologies and be more aware of, what's happening or what's going to happen in the future.
Oh yeah, I've got to ask you, just before you elaborate on that,
yes.
One of the key things is, if for a business owner, which is our audience, business owner, you're a C-suite of a company, you're running, you're a director, board of directors and so forth, you're a conservative investor. So traditionally, as in lots of Asian investors, you are heavily invested in properties. Yes. Your stocks that you hold are basically very related to consumer as well as banking stocks. How do you balance this and make this accessible, simple enough that they would participate in all of this, given the higher returns and of course the higher risk that go with it?
Yes, yes. Well, a few things that we do. One is we have a range of products in a sort of across the risk curve. So we have something as short as 3 months with CGS CIMB. That's a short-term product, short-term paper with them. That's like a fixed deposit equivalent. We also have private real estate funds. So we have Mapletree, who have a Europe portfolio. We have InvestCorp, which has US multifamily. These are like 7-8% distribution yields, and they're actually a portfolio of real estate. So a lot of your audience would appreciate that. A very strong portfolio value, valuation is very stable. Every year you clip a rental yield, every quarter you get something. And so, we have a lot of investors who like that a lot. Then we have the venture capital funds, hedge funds, PE funds, right? I think that's where it gets a lot more exciting. And that's where a lot of investors put some part of their portfolio in this excitement because, for example, they want to back ASEAN startups, right? So we have a venture fund which is onboarded called PNB Aura, and you can go in via that route. We are starting to look at companies directly coming onto our platform to raise, and again, that's a small portion of growth companies in very exciting spaces.
Okay, so that's interesting. So they can come to you direct and do a raise.
Yes, they can. Yes.
And what is the regulatory framework around that? So that's almost like an ECF.
Almost, yes, that's right.
Okay, so how's the difference? So ECF, equity crowdfunding platform, how could you tell us give us a sense of the differences?
So, okay, let's start with the companies. The first one we've done so far is a small company in Singapore called XM Studios. We did a pre-IPO raise, so it was a pre-IPO convertible note. And it offers a discount to the eventual IPO. They worked with us directly. Now, unlike a traditional SGX, because we are under the framework of accredited investors, the speed to market is faster. And it's a smaller raise. And so the company was able to raise that amount that they needed quite appropriately without having to go through the full legal process of a SGX, let's say, listing. And really that for them, it's a pre-IPO point. They will do an IPO at some point. So for them, it's a bit of a practice session.
Okay.
right? And understanding what does it mean to expose their shareholder base to a larger number, and also the responsibility of running, numbers and financials and all of that. So XM was a very interesting one. We also have another pre-IPO, but it's a REIT form called Elite Logistics. And that one, we're both of them, we want to sort of nurture them or help them to be able to sort of raise the capital and grow to a certain size before they actually move on to the main exchange. And that is something that we think we're quite passionate about. This is the SME space, as we were just speaking about SMEs earlier. There is also, we want to deepen the capital markets accessibility for corporates who are in the growth capital stage and who would like maybe to broaden their capital base, and they don't have the capability to manage that themselves. And they can work with a partner like ourselves to manage new investors, manage liquidity if those investors want to sell.
So in other words, you actually do some investment banking type functions.
We do, yes. Yeah.
That's interesting. So how has the traction been since you graduated from the MES Sandbox in February 2020?
I tell you, walking right into COVID was very scary, was really, really quite scary. We were we had to pivot very quickly away, and we're very grateful for that. We have grown our investor base. I mean, we started with 30 when we came out of the sandbox. That was the number we were allowed. I think we're growing sort of in double-digit percentages a month, and we'll bust the 1,000 mark quite soon. But I think what was quite clear is that we have been able to bring very high quality funds to our platform, and our investors have actually been very appreciative of what we do. Now, has it been an easy path? No, because we're new. We're one of the first, big digital names out there. We've had to really educate everybody about what digitization means, what is the licensing and the trust and the curation that goes on before we launch a product. So on the fund side, we've been very grateful because we've had very, very good partners that work with us. And we're starting to expand our product base as well. So, that means our investors can look forward to corporate bonds and pre-IPO equity, potentially structured products at some point.
Now, obviously, you having an anchor partner like SGX helps a lot. You've just raised your Series A at a $50 million round. So that's a lot of money. Tell us about your key investors, especially if many of them come from Japan, and how the money is going to be deployed.
Yeah, so it was actually quite a while ago. We raised that, we closed that early this year, actually. Wow. Seems like a long time ago. And, SGX has been very supportive. We're very grateful for that. But what we also realized from our fundraise, actually, we saw our shareholders as partners first, and then as shareholders. And you will see that a number of them are financial institutions, yes. Like, for example, Kanakin Patra in Thailand. As well as Tokai Tokyo in Japan, and Hanwha in Korea. So that was the sort of the first step. These financial institutions saw what was coming. I mean, they knew digitization was going to change the shape of capital markets, whether in the high net worth space or in the institutional space. They just wanted to sort of pretty much work with someone like ourselves to figure out what is the disintermediation, what is the disruption that's going to happen. And a lot of them then say, well, we can be your distribution partners as well. So we're working through a lot of that. Now, Tokai Tokyo, I think they're great partners. That we're working with them on a number of initiatives. I think Japan has a huge fascination for digitization and tokenization. And alongside, so when Tokai Tokyo came in, then they are, sort of, friends, as it were, which are JIC, in Japan Investment Corporation, Juroku Bank, MIC. So we had a number of Japan shareholders who've come in alongside that, because that's very topical in Japan. There are a number of players in Japan who are looking at tokenization efforts as well. So they're just putting their foot in. They're probably the first to invest in a proper platform outside of Japan. into
And
us.
so with 50 million, what's the growth strategy? Is it going to be continue to be organic, or are you going to pursue an acquisition strategy to accelerate growth because you've got a war chest?
Yeah, we have barely scratched the surface, Brian. You know, I think what we do, I think that what we've developed is fantastic. It really started as B2C because, you know, that's obviously the simpler interaction. There's a lot more we can do at the institutional level, and we're starting, you will see that over the course of the next sort of 6 months, that we're expanding into more B2B as well as B2B2C, and therefore the technology development that needs to happen there. The second thing that I think we barely scratched the surface is actually our app. When we launched our app a few months ago, we didn't expect it to be so popular, but it is right now almost caught up. Half of the subscriptions that are to our funds are done via the app. And it's so easy to use, it's so interactive. And I've had so many rave reviews. We're barely sort of, you know, it's a full functioning app, but there's so much more we can do with it that I think, you know, obviously some of that 50 million will be spent into developing the app use. And of course, we continue to think about we're based in Singapore. We're continuing to work through different regulators to see if we can, you know, work with a Patra or Tokai to deepen that relationship and see what we can do both, you know, offshore from Thailand and offshore Japan. And of course, you would have seen some news that we actually got quite some ways in China as well. So we have set up a small China outfit, and we have gotten what is called a QDLP quota from the Chinese authorities. And that is really for onshore capital to invest in offshore products. And we're working through, again, the development of that. So that will take up some of the 50 million indeed. You know,
and I can see a lot of complexity in terms and opportunities in terms of, and I see where you're coming from in terms of partnerships, in terms of leveraging of your existing shareholders in order to accelerate growth in specific markets.
Yes, yeah, that's right. I mean, inorganically, I think I think we should build the platform. I mean, there's so much, I feel like there's so much more we can do. I know I feel we've done a lot, but actually the couple of more platform sort of growth ideas there that we can execute. I mean, we're not shy to sort of look at partners and then maybe investing some of that with either technology partners or partners that make sense. I think the inorganic strategy will obviously have to be quite carefully thought out and executed, and it have to be quite specific to our growth needs.
Now, Oyi, it seems like you've got institutional investors behind you. Yeah. So the horizon is probably not a short-term horizon. When do you see an exit strategy for these investors? Is it an IPO? Is it SGX now loosening the rules in terms of the specs? Where is that coming from? I mean, where do you see some timelines that you could perhaps share with us?
Oh, we just got out you have to remember, we just got out of the sandbox last
yes, a year plus ago, 1.5 years ago.
Well, like a toddler, I see massive opportunity in the next couple of years. And I would say our shareholders would not want to exit. I think, in the near sort of 18-24 months, I suspect, because of, I think, what we could be sort of growing and delivering. I think it would be great to have front row seats to watch, I think, what we're doing. We have a fantastic tech team, an engineering team, and they're doing great work. Our commercial team is out there pounding the pavement every day for great products to be listed on our platform. So I think we're some ways away.
Now, you are head of investment banking at UBS. What are the key lessons that you learned as you transitioned from being stuffy investment banker to cool fintech chief commercial officer?
I was at UBS for 6 years. I worked very closely with, the equities and wealth management. And UBS is, you know, one of the greatest place. I mean, I made so many friends and I love them to death. I think where banking is going through a lot in terms of the regulatory shifts and sort of the increasing like regulatory scrutiny, and they themselves having to react to that is, I think, causing a lot of inefficiency and bureaucracy if you're not doing it the right way. I think when and that's not a UBS problem. I think that is a structural issue the banks are all facing. But when I step out and I joined the fintech, not so much because it was cool, but actually it was because it was a complete white sheet of paper, right? You kind of have a few designs on it, and then you're kind of like, okay, we can do things so efficiently if we did this and we did this, and we still managed to keep within the regime of the regulatory eyes, right? I mean, we're sort of obviously following the rules quite strictly. But I mean, just the breath of fresh air in a fintech, and to be able to sort of carve your own route, because we're doing things that nobody's really done before.
So because essentially you're dreaming it up and then making it happen.
Yeah, a little bit. We are, you know, we stared at these things. We're like, oh no, how are we going to do this? How do we tokenize? How do we digitize? You know, what's the path? And now we've got it figured out. We keep improving. And I think that's so exciting. The team needs to, they're always on their feet, like, okay, how do we do this faster? How do we do this, you know, so that we serve everybody's needs better? And it's great. I love it. I love it. You know, in a traditional bank, I don't think you have the latitude to do that.
Yes, because again, it's highly regulated.
Yes.
Now, we've thoroughly enjoyed this conversation, Oyi, but do you have any final nuggets that you'd like to share with us before we end this interview?
Wow, I have many nuggets. I think a few thoughts for the audience out there. One is obviously more personal, which is I never I never expected that I would enjoy this leap from a traditional banking environment to a fintech startup quite as much. It is a huge load of challenges, but I feel like I see the white space and it's so exciting to create something. So I think, that's something that, I would wish on everybody who want, a change and to want to create. But the second thing is actually at a deeper level. I see the financial services industry needing to change. And they're wanting to change, and this slowly, it's like a big ship that's kind of like starting to move, starting to turn, right? Because I look at what we do in terms of paper or the lack thereof. I see, I chafe at, wet ink signatures. I chafe at we have to still fax things to the bank. I just think that there's so much disruption that will happen in the financial services. And I would ask everybody who's related or in the financial services space to stop and think about what's happening and to watch what's happening. In particular, what's happening in the crypto space. I'm not saying crypto is good or crypto is bad, but I'm saying that the crypto world is teaching us a number of lessons as to how the future of finance might look like. So that's my nugget of wisdom.
Oyi, thank you very much for taking your time to be on the show.
Thank you for having me, Brian. It was great fun.
We've been speaking to Oyi Chu, the Chief Commercial Officer at ADDX, which is formerly known as iSTOX. I'm Brian Fernandez on Biztech's Asia's Hottest Startup Show. This interview will be on our various social media platforms, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.